Well, Bruce Linton is plotting out his next act in the cannabis industry. The founder and former co-CEO of Canopy Growth has revealed today he's joining 3 companies as an advisor. One is a Michigan-based cannabis dispensary chain, Gage Cannabis. Another, a CBD pet food maker called Better Choice, and a medical psychedelic provider, Mind Medicine Australia. In addition, he's making investments in 2 cannabis companies, Slang Worldwide and DNA Genetics, both of which have ties to Canopy. And he's in late-stage talks to work with a U.S.-based multi-state operator. All of this coming after his ouster from Canopy back in July. And there's Bruce Linton right now. He's doing a little pointing to the shirt. You've finally taken some of your cannabis fortune and you've invested in a T-shirt, Bruce.
Yeah, I did, and you don't get T-shirts made instantly, so I made this one, and you probably can't tell, but the top name where it says MSO is actually not a company; it's an area. So I'm still working through the details of joining as a board and investor to a multi-state operator. And I thought I had it done, so I made the T-shirt. And this morning I did arts and craft to put like a piece of paper with some pins to kind of deal with that. But I'm in New York. It looks like a billboard.
Yeah. Well, you're a creative guy. But okay, so we see the investments on your shirt. Why are you doing this all at the same time?
So when I thought about how come I was able to be helpful for the sector in Canopy, it's because I was able to be involved at source with regulators in a whole bunch of jurisdictions and to talk about things like animals, humans, both recreational and medical cannabis, and get active with our Beckley activity on what's the potential of other things that have been held back by prohibition that are psychedelics for therapeutic. And so in order to gain that view, I needed to do multiple companies, and the reason I thought was helpful is then it's less likely that I or those companies are going to be blindsided by something that comes out of another jurisdiction. And so that was the logic, and I'm not going to be CEO. I'm going to be the first call the CEO has at these places where I'm a board member if there's a problem, because I like hearing about the problems.
So the backdrop
and John,
of this,
you and I've talked, and go ahead.
Well, I was just going to say the backdrop of this is we've seen a sell-off, not just in the Canadian producers, but also U.S. exposed names. So it seems like there's been relatively few places to hide. Now that you're wearing almost exclusively an investor hat, not an operator hat, what does it take for you to pull the trigger on an investment? All these investments that you've made, is there a common theme?
Yeah, no, it's a good question. So I spent my summer looking at many companies in a lot of geographies. And what I found is that I wanted ones that were driven by science, that were aiming towards bigger results than simply moving basic product. I had to actually feel that the entrepreneurs were there because they had a purpose in the topic, not just to try to make money. And one of the things I said with the public ones is that the principals, as of today, cannot sell any stock for 12 months. And I did that because I think if you're excited about your company and I come and help you and work with you, selling stock just means that it sends the wrong signal, and it's not about get rich quick. So all of them had to agree to that, and I'd say maybe the final thing is that each of them was receptive to the idea that they had to work with others. So these companies, I think over time, you'll find have some common ways that they can achieve bigger goals.
In your experience or your observations, did you see a lot of people in the cannabis industry, the fast-growing industry, selling stock, in your opinion, way too early if they're supposed to be building this next generation of businesses?
Maybe a little bit, but for me it was more about reputationally. I think the reason sometimes shareholders like me is it's a bit like coming to my house for, say, Thanksgiving dinner. If I prepare a great dinner, I don't put everything on my plate first. I make sure everybody has something and then I get something. And I think when you're running equity-driven, capital markets-oriented businesses, I don't want any of the principals in these companies taking the stuff off the plate first. If shareholders see a price go up and they want to sell. They may feel sick later, but that's their choice. And so that was a bit more of my thinking.
It sounds like you're looking for kindred spirits and entrepreneurs. You use that word, in all of these companies. Given your experience as an entrepreneur who then partnered with an established company in Constellation, would you recommend that these entrepreneurs do similar types of deals, that if a Constellation type of partner came along, given what ultimately happened with you and Canopy, is that something that you would recommend?
Well, It's going to sound weird, but yes, 100% of the time. Really, think about what that deal was, that for a company that was about 6 years old, based in Canada, a major international firm would like to pay 5 billion Canadian dollars for 17% of it. And they get voting control for that, which, you know, as someone that's a bit aware, I knew that must mean that there were things that they might want to do that I wouldn't necessarily agree with, which over time would become a problem. And the solution to the problem is the variable, which was me and Mark. And that's okay. I think shareholders would have been much more disappointed if we didn't bring in all that capital, couldn't continue to go on. And if all of a sudden the capital markets tightened up and I had to put a press release out saying, oh, sorry, we went bankrupt because I wanted to keep my job. That would probably be the wrong way to look at the circumstance. And so, yeah, I'd do that. I'd recommend them do that deal all day long. Now, should they have voting controls and certain things? Maybe, but you don't want to go in too early and end up out the door for 50 million, but I'm telling you, 5 billion for 17%, you guys give me that, you can fire me all day long.
Bruce, I'm not surprised to see a Canadian in the second half of September wearing a T-shirt. But since you are focusing here on U.S. investments, I did just want to pick up on something Amber was talking about. I mean, here in Canada, we just saw the TSX get to record levels this week. But over the last 3 months, whether we look at a stock like Canopy, obviously we've talked a lot about the CanTrust fallout, or Aurora. I mean, every time these companies report their results now, and there were sort of expressions that perhaps profitability is reality and investors are disappointed, we've seen some pretty lousy performance. And I think a lot of investors are wondering what's going on with this sector right now in Canada. So to Amber's point, as an investor, how would you feel about investing in Canadian cannabis stocks right now?
Well, I think people are going to be a lot more selective. So like a company like Canopy, when January comes, and I realize it's not a big beverage season January, but I think the ones that invested a lot of money to have the ability to actually have the new products, because the new product will have very little cannabis and a whole bunch of other ingredients and have a great sale price. So the margin will be amazing in those compared to just selling dried bud. And so I think you're going to find that the people who blew all their money becoming growers are going to have very little to actually deliver that'll be high value. So I think it's going to stratify very quickly. And then it's going to come down to the trials that they're running. If anybody's running a trial and they can read data, you know, the results of the trial say this. If those results say this is great for grandma and here's how you deliver it so that they're less anxious or sleep better, that's going to drive those individual stocks, not the sector, because the IP will be attached to one. So listen, I still feel very good about Canopy as a stock. I wish somebody would buy the assets of CanTrust and please take it off the news and out of the headlines. But there's so much more going on in the world, and I wasn't as aware of that before I got into these. And like these companies represent a window to the world. I'm amazed how much more interesting things are starting to happen for research in, say, Europe, and how that can actually have implications on how animal care happens in, say, America. And by the way, I still have they think I'm environmental down here, guys, but really I have my Martello mug because it looks like I'm environmental, but like if you're going to go on TV, you should probably always have you know, explanations of each item that you're wearing or carrying. So I didn't want to leave the poor Martello guys out.
You're not leaving anything to mystery. It's all out there on your shirt. One of the things
no, the shirt, yeah.
And the shirt, yeah. Don't worry. So it's companies that you're advising, the MSO Engage, and then what's the one on the bottom? Is it Activist?
Yeah, so it's called Activist. Those are the ones where I'm putting money in, and I expect to see results, and I know the actors very well. So my intent on the ones I just invest in but don't take a position is to actually cheer for the entrepreneurs quite loudly and be demanding. In the three, Gage, Better, and Mind Medicine, that's you know, a Michigan-based, and then an animal care, and one working on psychedelics. Those I'm involved with how they operate. I'll be either executive chairman, own a significant percent of some of them. The one that says MSO underneath it is actually the name of a company that I didn't get the deal done with, so I had to figure out how to hide it because I still want to have an MSO.
I guess I'm curious,
if you did like a real zoom in.
On the activist side, is it like activist, how we think about being an activist investor? No.
I'm the good kind of activist. I'm not going to have a proxy war. What I'm going to have is you're the entrepreneur, you started this thing, you've got to make it happen. And if I see any indication that they're getting greedy and forgetting shareholders, if they're getting a little bit slow, like I expect them to move at a fairly fast drumbeat. And so when I'm an investor, when I say I'm an activist, I'm not waiting for the report, I'm saying what I want in the report. and I'm not waiting to hear, we think we'll have a new product in a year. Well, I want to understand why it can't be in 3 months. And so that's when I say activists, it's to be pushing the entrepreneurs, but not pushing them out the door.
Bruce, we're going to do a little rapid fire because we're running out of time here. But first of all, you mentioned Canopy stock. You still own all your Canopy stock?
Yeah, to my knowledge, I have not moved any of it since I left, and I bought a bit more.
Bought a bit more. And then you mentioned CanTrust. You'd like to see somebody acquire those assets. What's your best guess on who would buy that?
Well, there was at least one company, Sundial, was going public, and they went public. I tried to reach out and say, guys, why don't you stop going public, buy the assets, settle it with Health Canada, make sure everybody's happy, and go public with those things in it. So that didn't happen, but if there's somebody else thinking about going public, the right thing to do is conditionally acquire the assets of CanTrust, get Health Canada to say they're going to treat them okay because you'll fire anybody who makes more than 50 grand, and get on with putting that thing to purposes that are regulated.
But you don't know that. So you're talking about Sundial Growers?
Yeah, so if I was a private company right now that was sort of getting momentum and I had to differentiate myself in the market before I listed, I think doing a transaction that actually is like that is going to create a differentiated value, and I bet you'll get a great deal, and you'll end up with an asset that's going to produce a lot of cannabis and a regulator who likes you.
But you don't know that they've done anything like that with CanTrust or had those conversations?
No, I'm giving advice, so anybody with a private company that can do that, please do it. You know what I mean? It's one of those things, it's an obvious thing to do, it's just not done.
I gotcha. And very quickly, edibles. You made a quick reference to that, but the issue with retail supply of cannabis so far, it's been pretty mixed results, and that's, I think, a fair way to characterize it. I mean, do you think when the edibles come to market, the supply-demand thing is going to be figured out by both companies and governments?
Yeah, I think now the problem probably would be that there's too much in warehouses. I think Aurora pointed that out, because there are too few stores. I think there's going to be fewer companies which have great products available, so it won't be that everybody has edibles, but I think companies like Canopy have been thinking about and will have a great supply. The choke point's still going to be retail, and that's up to the provinces to go faster. You see places like Alberta and Newfoundland doing a great job. Ontario's starting to accelerate.
Okay. Bruce, thanks for breaking it all down. And
always good to talk to you guys. Thanks for having me on.
We'll wait till you patch something on and get rid of the sticker or whatever. What is that? Gaffer tape? What is that?
Wait, it's a little cue card, and then it's 4 safety pins and a Sharpie. You can, John, if you want to take your gear up a notch, I'll make you one.
To do it. Okay, I might take you up on that. Bruce, thanks very much, as always. Bruce Linton, founder and former co-CEO of Canopy Growth, joining us from New York.